Welcome. I'm going to be recording this video and answering this question of is Adani Green the next Reliance or Suzlon in a couple of parts. So this is not going to be a quick answer. So I'm going to slowly examine this. I'm going to peel the onion slowly, and it may, over the three parts take over an hour to finally complete the session and talk about this. Because the question is interesting. I found it fascinating when I tried to peel the onion. And it is more a generic question for every friend of India, because Adani Green is just taken as an example of what kind of systemic changes we might have to make based on this analysis. So, if you find this interesting, please do watch these videos, and then you can watch the second and maybe the third part. I'll try and do it in three parts. So this is the first part. Okay. So why is this important? Now, so if you were to invest your money in a company like Adani Green, and it gave you returns, you stayed patiently invested, like Reliance did, then you would become very wealthy and you would get a really good return, right? On the other hand, if you invested your money in Adani Green and it gave you a return like Suzlon, then you would pretty much lose all your money, right? So now, of course, you have many choices on where to invest. So you don't really need to invest in either in Adani Green. So then this question won't be necessarily relevant for you. But still, it's an interesting question to think about. The other thing is that if you are a taxpayer, then some of your money is going to get invested in Adani Green, whether you like it or not, because Adani Green has a lot of debt. So it has borrowed extensively, and it has borrowed quite a large sum of money, I guess, from public sector banks. I've not 100% verified this, but given the very large amount of debt it has, it's more than likely that the public sector banks have a huge portion of that debt. So, and since the public sector banks are basically funded by the government, then you are essentially lending to Adani Green indirectly. So some of your money is involved in Adani Green. And now if this money, the public money, is utilized well by Adani Green, then it's great, because if it does something like Reliance, then it'll create a lot of value, both for shareholders, for the country, for the economy, and so on and so forth. But if it doesn't, and it utilizes this money as a Suzlon, then it'll cause problems for the economy, which are not just the NPA, which are lost to the public sector banks and other debtors, but it's also going to push back the economic growth for the country. Because if you take a company like Suzlon, which was into wind energy primarily, then it possibly could have become the largest windmill company in the world, and also contributed to India's renewable energy plans in a much bigger way than it probably did, and so on. But the fact that it ended up becoming a problem both caused an NPA problem as well as a problem that India's renewable energy goals were not met as well as they could have been. Finally, what we will also look at is that these kind of structures that we have in India, I think when I looked at Adani Green and the Adani Group, I kind of understood, I think, a little more about what are the systemic flaws in the Indian system, which lead to the chance of economic growth being derailed and these NPAs being created. Now, that does not always happen. Sometimes it's a very happy ending, but there are systemic flaws. And one of the things I want to do towards the end in the third session is suggest some ideas about how these systemic flaws can be fixed, because that would be very important for projects such as this, because as you will see that in the initial stages, it's very hard to determine for sure whether the outcome is going to be like Reliance or Suzlon. So let's start by taking a look at the stock price charts of Suzlon first. So we'll just go there. And if we look at the max period that they have, then we will see that the Suzlon price went as high as 460 rupees and as low as 1 rupee 70 paisa, and is now at 5 rupees 5 paisa. Correct. So if you had invested at 459.80, the high point, okay, you would have basically lost a lot of money, and it would just be 5 rupees right now. Okay, so we saw that. Now let's go to Reliance. Now, had you invested in Reliance many years ago, then this I think is a 20-year period, but your returns would have been 27 times. That is, your money would have grown 27 times or 2,700%, which would be a pretty handsome return. Right? Then let's look at Adani Green. Now, Adani Green has just been in operation for about 2 years. Right? So if we go to the max here, and I think right up to here, it's hardly done much. Right? So up to September 11th, 2019 or so, it's been more or less flat. I mean, it has grown. It's grown from 31 to 43 or 48 or something, So, but in the last year, it has absolutely taken off. There's been a little bit of a dip here when stocks fell from January to March. Okay. So it fell from about 207 to 129. So that was quite a sharp dip. But then it went back on its great growth path, and it is now at 358.85, which is about 100 rupees lower, 131 rupees lower than its high. So considerably lower, but still than its high, but still a very, very handsome gain over 2 years, right? So now you have an idea of this whole picture of Reliance, Suzlon, and Adani Green. Okay, so let's move on. Now we want to answer the question that, is an Adani Green investor going to see a Reliance-like outcome, or is he going to see a Suzlon-like outcome? And also for the country, are they going to see a Suzlon-like outcome, or is Adani Green going to be the star, which utilizes a lot of public money and delivers great outcomes for the country? Okay, so now let's start off with the case where it's going to become like a Reliance, and I'll give you some data for that. And we're going to start with trying to look at this presentation, okay, which is basically the analyst presentation which Adani Green had presented to analysts sometime, maybe I think in April 2019. Okay, so a little over a year ago, right? Now, we won't go through this entire presentation because it's like 58 slides, but I'm going to highlight some really positive things to you on this presentation. Okay, so the first thing is that it's a leading infrastructure conglomerate in India. So you have Adani Power, you have Adani Transmission, you have Adani Enterprises, which was the original holding company, which was founded in 1988 by Mr. Gautam Adani. Okay, then it has Adani Ports, Adani Green Energy, and Adani Gas. It has also expanded its footprint globally, but I'm not going to cover that because I think it has some projects in Australia and things like that as well. Okay, and as you can see, here is the kind of revenue of these companies, right? In terms of where they stand. Okay, so the combined market cap is 157,000 crores, of which Adani Green Energy is just 5,800 crores. But remember, this is before it took off, right? So now I think the market cap is well over 50,000 crores or somewhere around that region. Okay. So now if you look at this in Adani Enterprises Limited. So if you were an investor in Adani Enterprises Limited, then you invested 150 rupees in November 1994. That was 93,000 rupees in April 2019. So in a 15-year period, you had about a 29% CAGR, which is outstanding for that length of time. And your 150 became 93,000, which is like over 600 times. So quite, remarkable in that. So you can say that, Adani Enterprises has already created a multi-bagger. So maybe Adani Green will also be a multi-bagger. And in the same time, the Sensex only did 9.6% CAGR. And in the Sensex, your 4,124 that you invested has grown about 10 times, right, in this 15-year period. Or rather, sorry, I'm misspeaking here. It's a 25-year period. So it's 25 years for 600 times or 10 times, right? So you can see how a difference in CAGR of from 10 to 29, what a big difference it makes over 25 years. Okay, so then it talks about its track record. It's mastered the art of executing complex projects. It goes on to talk about how it's the largest integrated energy player in India, and that it has key shareholder touch points across all the energy landscape in India, like the ministry, the advisory, the regulatory, the statutory, the transmission and distribution utilities, the dispute resolution. So what Adani Energy Green is trying to tell us is that this is a very complex problem, especially in India, because there are multiple authorities, multiple roadblocks, multiple problems, but we know how to deal with this. Right? Then you go on and on here, and it tells you about the industry, how, in India, there's a great need for renewables and stuff like that, and things like that, and how what has been the past dynamics of the solar sector, what has changed, what has been the response, so that you can get a good sense of how, some of the past problems with the solar sector need not be the problems in the future. Okay, and then it says that it can deliver this power at a very competitive cost, which is why it's winning deals. And how the hybrid technology is driving the solution. Then it also tells us that, suppose India was to produce 175 gigawatts of renewable capacity, how will that get integrated into the grid? Because one of the problems, especially with solar or wind and things like that, is that this power is intermittent. It is not continuous. So how will the grid be able to handle it? And they show through the Central Electricity Authority with a lot of engineering, which even I find a little difficult to understand or go through. So I take it at face value that yes, the Central Energy Authority has looked at this, and so on and so forth. And so it will be able to manage the load and the off peak and the on peak and, various seasons and stuff like that. So that this whole integration will happen, whether it's a monsoon, non-monsoon, best case, worst case, etc., etc. So they're giving you a lot of detail. Then what they're also telling you is that the current technology for solar is very robust, and that it allows a plant life of well over 25 years, because these purchase power agreements are for a period of 25 years, right? And so once this massive investment has been made, so it requires a lot of capital outlay in the beginning, but after that, you have a steady stream of inflow of revenue for 25 years and maybe much longer than 25 years. And it requires very little maintenance, right? Because these solar modules, etc. So the operating costs are quite low. And if you later look at the financials, that seems to be true. So now you've got this very upfront engine of stuff, that capital expenditure that you're going to make, but that's going to give you a very nice income stream for a very long time to come. So it tells you about its management and its project execution strategies, because that's key, and the critical success factors, and what differentiates them, what development pipeline do they have. And then this is really a very interesting thing, that they talk about this Kamuthi solar project, where they were able to commission 648 megawatt plant in just 9 months, while it took a 550 megawatt plant in California 3.25 years to execute, right? So same here as Adani Energy in India, executing a plant in 9 months, okay, while in California it took 3.25 years, right? And this has been featured on National Geographic and so on. So it's also executed 33 other projects. So there's been demonetization, GST, so various changes happening in India. But we at Adani Group and Adani Green know how to deal with this, and we are this execution machine. Okay, and then it goes on with other projects that they've done, and how they get the best equipment from the best suppliers, and because of their size, they're able to negotiate very good deals. So their operation and maintenance strategy they've outlined, and how they monitor and make sure that the productivity and all that for the power is very good. And they're able to, because their purchase agreement, so if they don't generate power, they're not going to get paid, right? So it's very critical that whatever infrastructure they put in actually works very well, right? So that way the government has also reduced its risk. That you are not, and you have an incentive to actually produce that power and keep your plant energy efficiency very high. Okay, and then this is the holding structure of the company and all that. But I think we've covered a lot of the positives. I will come back to this presentation when I talk about the Suzlon case, right? So in this particular thing, I've taken the positives from this presentation for you to dwell on. Okay, and we've talked about this and the execution engine. And then if you looked at Kamuthi solar project, you can go in and look at the Wikipedia, what it says about that project. And then, in some ways, what has happened is, and why have I got this in the positive case, that, if the Adani Group has been smart and it has sort of done what I would call sophisticated corruption, in the sense that it has aligned all stakeholders. So if you are a critical bureaucrat or you're a critical person for executing some of these things, then maybe you have shares in the earlier part of it, whether you may not have them directly in your name, but it could be in some names, etc. And therefore, all the stakeholders are aligned, right? So for the political parties, it may have gifted some shares, done whatever is available legally. So in some ways, this whole thing in form of having the stars aligned, so to speak. Now, whether you call it corruption or not, it's a separate matter, but it is a very, very sophisticated form of corruption. And those who know how to play this game could produce Reliance-like outcomes rather than Suzlon-like outcomes. Okay, now here we have a few things which really talk about, some of the challenges that these people will face, and what are the challenges that are already dealt with, right? With this Kamuthi thing, which was done in 2016. So the first one, which I will not click, is another 85 slide presentation, which actually goes into a lot of details from the person who's the operational manager at Kamuthi, senior person at Adani Green, who's telling you about how the the Adani power plant is actually producing a fair amount of energy. Now, the next thing is a video which BBC has done, which actually gives you a visual look at this particular plant. And I'm just going to go there very quickly. It's just a 3-minute video, but I just want to show you something towards the end. So here it just shows you, like how this particular thing looks. It's 2,500 acres of glittering glass and things like that, right? So it takes you for a tour of that. It tells you. Then it tells you about how there is a problem with clouds and all that, but only the clouds only cover a certain part. And then towards the end is what I wanted to show you. See, as to how you have a robotic cleaning of the panels. So this is an Israeli firm which makes this robotic cleaning thing. So, that way the productivity of the panels does not get affected, right? So this can give you an idea of how, they've been looking at technological solutions to make this whole thing work and produce a good amount of power. Okay. Let me see how I can close some of these. Yeah, so I close that. Okay, so that's how we can look at this second link here. Then this particular thing is showing that, like now around Kamuthi, once this thing is sort of, then they want to do another 500 megawatt solar park close to Kamuthi. So the Tamil Nadu government. So later on, if there are more projects that come in, maybe Adani Green has an edge. Okay, and then here are some of the things which people have to contend with in India. Like, in this whole Kamuthi structure, there are certain companies which have been created to distribute stuff, but then they get involved with the regulatory authority and then they go to court and they have to fight various things. So this is a link there. And also how, like if you look at this link, how, these environmental justice kind of people come into the act. And then they say predominantly women protest to protect drinking water sources and ask for employment in exchange for the farmland lost to the Adani's group, 648 megawatt power plant. And the company so far failed to react to the emerging injustice, right? So there seems to be an atlas of all kind of places where environmental justice has not been met. So these are some of the challenges Adani Group will face, but its competitors will also face this. So if it is able to effectively respond to these challenges, then it has a competitive advantage, right? So these are some of the things which make it quite interesting to see why and how maybe Adani Green will end up being more like Reliance and less like Suzlon. So that will end part one of the video, and then we will carry on this discussion in the second part of the video.